Hey everyone, welcome back to Corporate Decoder, the place where we decipher the confusing language of corporate filings. Today, we're diving into HighPeak Energy's latest -3 registration statement, and let me tell you, it is packed with information about how they plan to raise over $300 million. Get ready for some insights that go way beyond the usual corporate speak. Before we get into the nitty-gritty, if you like getting clear, no-nonsense breakdowns of these filings, make sure you are subscribed. And hey, we've got a fantastic community over on Discord sharing insights just like these, so check that link in the description below. So, what exactly is this document all about? HighPeak Energy is filing this S-3 registration statement to essentially tell the world they want to sell up to $300 million worth of their common stock. Think of it like asking for permission to go on a big fundraising roadshow. But that is not all. There is also a whole section dedicated to allowing existing shareholders, called selling security holders, to sell up to nearly 109 million shares of their stock. So, it is a two-part play, the company raising fresh cash and some big shareholders cashing out. This was filed on the 4th of November 2025, which is important because it tells us the data and information we're looking at is from around that time. Now, HighPeak Energy isn't some brand new company. They're in the oil and gas exploration and production business, specifically in the Permian Basin in West Texas. You know, the really oil-rich part. One thing that stands out right away is that HighPeak Energy is calling itself an emerging growth company. This is a special status in the financial world that allows companies to take advantage of some relaxed reporting rules. It means they might not have to share as much detail about their financials or executive pay as other, more established companies. They can essentially ease into certain regulations, which can be a double-edged sword for investors wanting full transparency. They'll stay this way until they hit certain revenue milestones or become a large, accelerated filer. This filing is a bit of a hybrid. It contains not one, but two prospectuses. The first is a base prospectus for the company to sell up to $300 million of its own stock. The second is a resale prospectus, which is for those selling security holders we just talked about. They're looking to sell a massive chunk of shares. Over 108 million, which came from their business combination back in 2020, and also from something called a forward purchase agreement. When this many shares are hitting the market from existing holders, it can put pressure on the stock price. Now, you can find their stock on the Nasdaq under the ticker symbol HPK, and here is a snapshot of their stock performance. On the 30th of October 2025, the closing price was $6.36. That gives us a baseline for understanding the value of the shares being registered. Let's get a clearer picture of what HighPeak Energy actually does. They're an independent oil and gas company focusing on exploring, developing, and producing crude oil, natural gas liquids, and natural gas. Their main operational areas are in Howard and Borden counties in Texas. As of mid-2025, they had a large land position of over 143,000 net acres, and a significant portion of that was already producing. They also mentioned they're operating with one drilling rig and one frac crew, and plan to keep that up for the rest of 2025. This tells us they're actively drilling and producing, which is the core of their business. As with any investment, especially in the volatile energy sector, there are risks. HighPeak Energy flags a whole host of them. They're talking about market prices for oil and gas, inflation, geopolitical instability like the wars in Ukraine and the Middle East, and regulatory changes. They also mention risks related to their liquidity, access to capital, and the results of a strategic review they're undergoing. It is crucial for any investor to thoroughly read these risk factors, as they outline the potential downsides of owning their stock. So, if HighPeak Energy sells its own stock, what will they do with the money? Unless their prospectus supplement says otherwise, they plan to use the proceeds for general corporate purposes. This could include paying off debt, funding acquisitions, capital expenditures, and working capital. They're not pinning it down to one specific project, which is pretty standard for these kinds of broad registrations, but the prospectus supplement for any actual offering will detail the exact use of funds. Let's talk about the stock itself. HighPeak Energy is authorized to issue 600 million shares of common stock. As of the date of this filing, there were over 125 million shares outstanding. They also have some anti-takeover provisions in place, like Delaware Section 203, which can make it harder for someone to acquire a controlling stake in the company quickly. This is pretty common for publicly traded companies, meant to protect existing shareholders and management. Now let's pivot to those selling security holders. This is where things get really interesting, especially with the sheer volume of shares they're looking to offload. We're talking about John Paul DeJoria Family Trust, DeJoria Dynasty Trust, Jack Hightower, and some entities like HighPeak Pure Acquisition, LLC HighPeak Energy LP, and HighPeak Energy II, LP. These are significant holders including individuals and investment vehicles. Some of them are looking to sell millions of shares. For example, the John Paul DeJoria Family Trust is registered to sell over 15 million shares. Jack Hightower is also looking to sell over 13 million shares, which comes from a mix of stock options, restricted stock units, and family holdings. It is important to note, as the document states, these selling security holders are not making any representation that they will sell these shares, but they have the right to. The company itself will not receive any proceeds from these sales. The money goes directly to the selling stockholders. This can be a signal to the market when large holders decide to sell. It sometimes indicates they might see limited upside or want to de-risk their positions. How will all these shares get sold? The plan of distribution outlines a few ways. They can sell on the Nasdaq in private transactions, through underwriters, or even by writing options. Essentially, they can use pretty much any method to get these shares into the hands of buyers. For the selling security holders, they'll likely use a mix of these methods, potentially through brokers or in block trades. They're also mentioning that any compensation for underwriters or brokers will be detailed in the prospectus supplement, but FINRA rules limit this to 8%. We're also reminded that these selling security holders are subject to regulations that might limit their selling activity, especially around the time of the offerings. Looking at the exhibits, we can see a lot of the foundational agreements that led to this situation. There is the original business combination agreement from 2020, which is how HighPeak Energy itself became a public company. There is also the registration rights agreement, which is what gives these selling security holders the right to have their shares registered and sold. This is often part of the deal when a private company goes public through a merger. Now, let's talk about the money. The filing fee for registering this massive amount of stock is a significant number. The SEC registration fee alone is listed as $136,959.48. While this might seem like a lot, it is a relatively small percentage of the total potential $300 million offering. It shows the scale of what HighPeak Energy is planning. Another interesting part is the indemnification of directors and officers. This is basically a way for the company to protect its leaders from lawsuits. They carry insurance, and their charter and bylaws allow for wide-ranging indemnification. This is a common practice, but it can sometimes be a point of concern for investors, as it can shield management from accountability. Pull the balance sheet of HighPeak Energy, Inc. as of the 31st of December 2024, and the related consolidated statements of operations, changes in stockholders' equity, and cash flows for each of the 3 years in the period ended the 31st of December 2024 FIMPOL. Let's look at the actual financial performance. So we can see what is behind this fundraising effort. We're looking at their 2024 financials, and the story here is focused on their oil and gas operations. Their revenue is tied directly to commodity prices. We see substantial numbers in their balance sheet, like a significant amount of property, plant, and equipment, which reflects their investments in oil and gas assets. Pull the information included herein regarding estimated quantities of proved reserves of the company, the future net revenues from those reserves, and their present value as of the 31st of December 2024 FIMPOL. And importantly, they're also providing estimates of their proved reserves from Corley, Gillespie, and Associates. This is a key indicator of the company's future potential. These reports detail the estimated amount of oil and gas they believe they can extract and the projected revenue from those reserves. For an oil and gas company, this is like the bedrock of their value. Looking at this filing, HighPeak Energy is clearly in a phase of trying to capitalize on its assets. The S-3 filing is a tool for them to either raise capital for future growth or potentially to allow early investors and founders to take some profits off the table. The dual prospectus approach suggests a dual objective. On one hand, they're seeking funds for general corporate purposes, which could be for developing more assets or pursuing acquisitions. On the other hand, a large number of shares being registered for resale by existing shareholders, like the trusts and partnerships we saw, might indicate a desire by those early holders to liquidate a portion of their stake. The fact that they are an emerging growth company means we might not get the full picture on some financial details right away, which is a definite risk for investors. Investors should pay close attention to the risk factors section, as the oil and gas industry is inherently volatile and sensitive to global events. The large number of shares being registered for resale could also signal a potential increase in the stock's float, which could impact its price. In conclusion, HighPeak Energy is positioning itself for significant financial activity. While they have valuable assets in a prime location like the Permian Basin, the decision to offer both new shares and allow such a large resale of existing shares raises questions about management's outlook for the stock and the company's immediate capital needs versus shareholder liquidity desires. The success of these offerings will depend heavily on market conditions and investor appetite for energy stocks. Alright, that is our deep dive into HighPeak Energy's -3 filing. What is your take on this dual offering strategy and what it might mean for HPK stock? Let us know your thoughts in the comments below. If you found this analysis helpful, smash that like button and be sure to subscribe for more corporate decoding, and don't forget to join us on Discord. The link is in the description. Thanks for watching, and we'll see you on the next one.